Hello and welcome to another update video about COTI. It has become a very popular coin on this channel. So as you know, I always try to focus on the coins that are most popular. Obviously there are some general coins that I always cover, but then always the rotation varies based on popularity. At the moment, COTI seems to be very popular. The situation on the COTI chart is still that I'd like to see actually one more high in this circle wave 3. So the assumption was that, the assumption was that a B wave low formed here in October 23. B wave low, let me go to the daily chart for anybody who is not aware of the previous video. So A wave up, then the B wave down. There's an alternative white count, which is the bearish one, which would become active if we break below support, but we're not breaking below support at the moment. There's a micro support level here that needs to hold to keep the yellow count going in an overall bullish thesis, obviously, which is an ABC structure. Could always turn into something more bullish, but hey, let's keep it somewhat realistic, please. But yeah, we're basically in this assumption now in circle wave C. In circle wave C, now let's go to the 4-hour chart for that. And in circle wave C, we can see that we completed a wave 1, a wave 2. Wave 2 bottomed in January this year. Because the movement to the upside is corrective, I see this move up as diagonal, the C wave. Therefore, it can't be a third wave really, because it looks more like a corrective structure. So it can be a diagonal in which we have an ABC structure in wave 1, then wave 2, ABC in wave 3. So basically we're now in the C wave, which is a 5-wave move. And then we should get a wave 4 and a wave 5. Now the third wave itself is already quite extended. You can see that we are now approaching, if we get another high, which I would prefer because I'd like to see 5 waves in wave C. If we get one more high, we should reach the area between 32 and 38.5 cents. This would be then a complete 5-wave move in wave C of 3. That's what I would prefer. The already communicated micro support area is between 14.8 and 20.6 cents. So that's the critical support range here against which we can focus on higher. Any break below 14.8 cents would require a reinterpretation of the chart. I mean, technically speaking, the third wave in terms of Fibonacci extensions, what was already reached, it could be complete. It's just that looking at the microstructure, one more high would be preferred. If we break below 14.8 cents, I would assume we are already in wave 4, circle wave 4, but then 11.9 cents is support. And honestly, below that level, things are gonna start to get far less clear on this chart. I would say already below 14.8 cents, it's gonna be difficult. It would be ideal to form one more high. Backup plan would be that we're already in circle wave 4, and then you already have the next support level. Below that, yeah, it's going to be difficult. I mean, again, a break below 11.9 cents will not confirm that we're bearish, but it would make the bullish assumption less clear. And then it's the question, okay, do we want to trade something that's not so clear? It's already a fairly unreliable chart because we're moving up in a diagonal pattern, and looking at the bigger picture, it's an ABC structure. So, but therefore, I can only say it's not a reliable chart. I see that. I know microstructures will change in this chart, but as long as it's holding support and following the roadmap and following the milestones, we can continue to focus on the bullish thesis. Now, let's assume we are already in circle wave 4. Then we need to be aware that obviously it could be a diagonal pattern, this C wave, right? That's the assumption. So a wave 4 could also go below the 50% fib level, but honestly, it would be very deep wave 4 then, and would be unreliable in my opinion. Yeah, I mean, it's just also the having the right look, okay, having the right look, and I would see that as a very, very deep wave 4. I mean, to be honest, the third should be here then, but yeah, we don't want it to go necessarily below the 50% fib level. Please be aware the 50% Fibonacci level is not an invalidation point in a diagonal, not especially, and technically speaking, the invalidation point for a wave 4 in a diagonal is the low of the wave 2, 4.8 cents. Now we don't want to wait until then. So typically it is that below the 50% retracement, these charts start to break down, and it can always morph into something different like a larger ABC, but that's what I mean. It is then just not reliable anymore. It's already not so reliable, but it will just deteriorate further. Okay, so those are the key levels to watch. Looking really at the 1 hour chart, you can see it a little clearer, that we have here this AB structure. B wave bottomed in February 2024. Then here wave 1, wave 2, wave 3. Nice 5-wave move in wave 3, then a wave 4, and one more high. Yeah, would be preferred. Also, the move down looks corrective at the moment. It's reacted to the 23.6 fib level. We should not be surprised if it needs to use a little bit more space in this micro support area. 20.6 is the first line of micro support. Below that level, we have 17.2 cents and then 14.8 cents. And then against that support area, yeah, a 5th wave is still preferred. It's still preferred. Doesn't need to happen. It's not guaranteed, you know, because we're dealing here with a larger diagonal. Yeah, they're always a bit difficult, but they are the next Fibonacci levels to watch. They are the next Fibonacci levels to watch. Confirmation that wave 4 is over. Difficult. I mean, we are already on the 1 hour chart here. Just doesn't have a lot of structure here. It looks to me as if this is a 5-wave move maybe. And it could be wave A, okay, wave A of 4, but I don't want to, you know, it's, again, it's not so much of a reliable chart, and could be this, you know, that's just sort of, if we see an extension in wave 4, this is what I would be looking at. At the moment, there's no evidence that this 4th wave is finished. So we could be dealing here with a more extended wave 4, an ABC structure or something. But they can change very quickly. So on this micro level, especially, you know, the chart is one of those that can quickly just sort of change, where you don't get a lot of clarity on the microstructure. But hey, you know, support areas are defined. Next upside targets are defined. Let's see if the market can turn around before breaking below 14.8 cents. That's the critical support. That should really matter. But then below that, it's directly the 11.9 cent level. It's just a question, are we in this wave 4 or this wave 4? And my preference is clear. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.